Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Petersen.
All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, great week, wherever you are and whatever day it is for you. As always, it is Friday on the podcast, so we're bringing that good Friday energy to you. And this is going to be a unique episode. We're going to be talking about family offices with Richard Wilson from familyoffices.com, appropriately named. So all you guys who are interested in creating clubs, raising capital from high net worth individuals, this is going to be the episode to jump into. I am super excited to jump into it. Richard, thanks for hopping on.
Yeah, appreciate you having me here, Gabe.
Absolutely. I told you before we got on here. Actually, I didn't tell you before we got on here, but we always like to start with stories. We always like to hear how people got to where they are. So why don't we go back to the beginning of your story in real estate and tell us how you got here?
Yeah, sure. So I was raising capital and tried to reach out to institutional investors that wanted nothing to do with the $30 million in assets manager I was representing. So I had to reach out to individual wealth advisors, and one of them called themselves a family office. And they said, oh, well, all of our clients are accredited. They're all worth $10 million plus. And I said to myself, oh, I should only reach out to family offices. And turns out it was very hard to do so in 2006. So when there was no trail guide for me in the industry, I started a free blog and started blogging once a week, and then eventually every day, and got on the front page of the Boston Globe at age 26. And then it just took off from there. In the last 19 years has just been documenting and sharing my journey in the family office space, essentially.
Awesome. So let's, I want to break this down a little bit more for people listening, because not everybody understands what a family office is. They don't understand how it kind of fits within the whole ecosystem of real estate investing in general. So kind of lay the groundwork. What is family offices and why are they a good people to approach for investing capital?
Sure. Yeah. Family office is a horrible word because it makes people think you set up offices in people's basements. And basically, a family office is an ultra wealthy solution for investing if you're worth 10 million, 50 million, hundreds of millions, or $1 billion plus. And there's single family offices for a single family, and they have structures and teams managing full-time your wealth, or a multifamily office, which is like a wealth manager who's really dialed in to basically decamillionaires and centimillionaires. So when you think family office, just think decamillionaires, centimillionaires, and billionaires. They need different things than somebody worth $20,000 or $800,000, et cetera. So that's basically the industry. And the more wealthy you are, the busier you are. But one little mistake could cost you $50,000 or $10,000, and that quickly pays for a full-time team just to prevent mistakes, manage things holistically, et cetera.
Yeah. And so just to kind of put a little bit more color onto that, a family office is basically somebody who made their wealth elsewhere. Think, a doctor who's making $2 million a year. And then they create, they don't want their money to just sit there. They don't want that $2 million to be getting 4% in the bank. They want it to be getting 8%, 12%, 18%. And so they basically create their own company, their own investing company. And then, did that kind of align with what you're expectations?
I think the one number that drives it home is that the family office industry is bigger than all of private equity and all of venture capital combined. Yet most people don't know exactly how the family office space works. So that's what Family Office Club is here to do, is just kind of like make it more clear and democratize and digitize the industry.
Nice. And you mentioned it right there, Family Office Club. That is a club that you started, and it's specifically oriented towards family offices. And so if there's anybody to talk to about raising capital from family offices, you're the guy to go to. So why don't you kind of lay it out for us? If someone is, they're an operator, they've done some deals, they've gotten a good track record behind them, they want to start raising capital from larger investors, how do they go about approaching these family offices?
Yeah, sure. So you're 16 times more likely to close a deal if you meet in person. Lots of times people would rather invest with somebody they trust and know rather than someone that promises a lot. With AI, you can fake anything. Anyone can write a number on a piece of paper. It literally means nothing. If you overpromise, it's hard to overdeliver. So they don't want to work with people that just scream amateur hour by promising the moon and saying, I've got the best deal you've ever seen in your life. They don't care. They get a lot of deal flow, so they really want to look at the top 0.1% of deal flow, and they look at trust in the person, trust in the industry and understanding the industry, and trust in the actual opportunity, and can they go visit the site or understand that exact sub-location. I would also say that what most people mess up when reaching out to family offices is they don't have a unique enough strategy. They don't have a one-liner. They don't have a 1-minute pitch video. They don't have a one-pager. And when they have a pitch deck, it's usually 44 pages long instead of 15. So the busiest people in the world are just not going to read every page of your pitch deck.
Yeah. Nice. And so, so you mentioned you're 16 times more likely to close a deal in person. Is that like a Harvard study out there that's been done, or is that just kind of what people expect?
It's a study by Dr. Robert Cialdini. He looked at meta studies on how much you're likely to close a deal in person versus virtually. Those studies were done, and it's scientifically proven that that's the statistic. But that was all done before AI. And that was done on an average purchase of a vacuum, a car, a watch. Imagine if you're choosing your spouse. You might want to meet them in person. If you're investing $500,000, you might want to meet that person or walk the real estate in person, right? And that was before AI, where everything could be faked digitally. So it's even more important to meet in person. It sounds too crazy to say 50x more likely to close in person, but you really are if you're trying to close $500,000 or more in a check, you know?
Yeah. Yeah. I mean, that makes sense to me. I've never heard a number placed on it, but 16x plus makes a lot of sense to me. You know, even when I invest in other people's deals, I at least want to have a Zoom call. Like I want to understand what's going on. So when you talk to people about investing in family office deals, do you suggest that they, you know, if there's a family office in Austin, Texas, and they live in Wisconsin, whatever, do you suggest they fly out there and meet them in person?
Totally. I live in Hawaii, the most remote inhabited island chain on planet Earth. And we have 18.2 million people in our social media following and our social media groups. And trust me, if I did not have to fly all over the United States hosting events, I would just stay here in Hawaii and do Zoom meetings. But like you said, it's really important to meet in person. So we do 30 nationwide events a year, and I fly to every single one of them. And we do them in Dallas, Los Angeles, New York City, and Fort Lauderdale. And we're in those cities consistently every quarter to build strong relationships because of what you just said. It's so critical.
Every quarter. Nice. And I know that your family office club, that's kind of an umbrella for other clubs that you've also started that are niched down to specific professions, industries, et cetera. So you've kind of got the process of rolling out a club, an investing club, pretty well. So take us through the process. If you wanted to, start a new club, let's say for dentists, what is the process that you take to start up a new club and get these people involved?
Yeah, sure. So good examples are our Doctors Investor Club, and then our Deep Due Diligence Investor Club. And then an infant example is like our Pro Athlete Club. So it'll help to explain those examples. So what I found is that people like to invest with peers, and a doctor is more likely to trust the opinion of another doctor. And they're probably well equipped to conduct due diligence and get high conviction on a medical practice investment, right? It's like they spent 30,000 hours building that expertise. And so what I find is that if there's an area where you're passionate on and you're sourcing lots of deals in, then you may want to formalize it through a mobile app, a discussion board, an AI tool for due diligence, a checklist. You may want to figure out, is it going to be virtual only or meet in person? Do you care about monetizing it, or is it just to get better deal flow? Do you want to monetize it and get better deal flow, or are you really creating a club to raise capital from the club? And there's 1,300 investor clubs globally that we've tracked. We've created a database of all of them, and there's only 4 of us that host 30 or more events a year. It takes a lot of work to run events, and I'm often finding investor clubs that never make it past 50K to 200K a year in revenue, and we're doing 5 to 6 million a year in revenue. And so we oftentimes acquire 50% stakes or some sort of smaller equity stake to help grow other investor clubs. So it just depends why you're doing it. And that determines how you would set it up, if that makes sense.
Yeah, that makes sense. 1,300 investor clubs. That's kind of crazy. And that are you saying 1,300 real estate investing clubs or just general? I mean, crypto.
No, in general,
gold,
that
whatever.
includes like angel investor clubs. If there's a big angel investment platform that has 100 chapters, we don't count all 100 chapters. We count that as one investor club. But that's all types of investor clubs that we could track. I'm sure if we knew every one of the 100 languages in the country of India, and et cetera, there's more than 1,300, but those are 1,300 that we can find in English.
Yeah, that makes sense. So going back to what you said, it sounds like you had some kind of lead magnet. You mentioned an app, you mentioned a due diligence checklist, whatever that is, and you kind of use that as a driver to get people to your club. And then you mentioned you what is $1 million or so that you guys have in revenue. Or is this when people start clubs? Is the revenue it generates, is that from membership fees or is that from something else within that you're selling?
I mean, you just have to decide as a club, what's your risk preference? What's going to be the model? Some people start an investor club and there's no costs except for they set up an SPV and they syndicate all the deals. That might be good for growing membership quickly, but you might also lose some sleep at night because if you get people into a deal that goes bad, then there might be some attached liability. Some people might blame you for connecting them to that deal. And some of our competitors, have been sued out of business and gone out of business over just deals gone bad that the runner of the club was syndicating. So we just don't do that. We focus on running the best, investor club we possibly can, and we charge membership fees that are very reasonable. It's like a Netflix-like subscription, and you get access to all the events. So we recommend people do not hawk deals and syndicate 92 things with 22 different partners, because one of those partners is going to be very good at lying and be a fraud. And another partner will be an honest, hardworking person that just hits a major challenge or a health problem and loses everybody's money. And unpredictable things happen in life. So I'm just a big fan of just doing things in a way that's really sustainable and can sleep at night, and you can look someone and just tell them the straight truth and not have like hidden agendas if you can.
Yeah, that makes a lot of sense. And when you're just starting these, you mentioned if you have a previous experience in a specific industry, then you're going to go to that industry. Are you saying you go to like Facebook groups, you go to industry meetups? How do you get that initial cadre of people joining your club?
Sure. We had some doctors coming to our events and dentists coming to our events. And what I liked about them is they went to school for a decade. They got residency. They did another decade of experience. And then they started a medical practice. They were very unlikely to ghost me and just disappear on me as a partner. So I like that. They're really committed. I'm an Eagle Scout. I'm hardworking. I've been running my business for 19 years. And so we did a couple of dental investment deals, and then we found out we like profitable multi-location medical practices with multiple doctors per location, et cetera. So I got put on retainer to speak at somebody else's doctors investor club for several years, made lots of friends in the niche. So we're like, you know what? Let's create our own doctors investor club, make it one of the top 5 doctor investor clubs globally. And then that's how we got into the niche, because we wanted more doctor investor friends, more medical practice deal flow, and we get both by doing that. In the pro athlete world, what we're doing is having 100 pro athletes speak at our summits. Every summit, we do a pro athlete investor discussion panel, and there'll be 75 to 125 speakers on stage over a couple of days at our summits. And, half a dozen of those will be NFL, NBA players, basically. And with that, we're about 50 some interviews into the 100. We got to interview Mike Tyson, Meta World Peace has spoken at our events a few times. And what we're learning there is that there's different key influencers in the pro athlete space that have these hub spoke pods of relationships. And for anyone who's building an investment platform or raising capital, anytime you can get a many to one relationship as a champion of your cause, then things go faster. So in whatever niche you're in, if you can find that many to one access to capital or deal flow, then that's super strategic.
Nice. I like it. All right, we are running down the clock, but before we move on, you did mention AI in our conversation before we hopped on. We went live, and AI is one of the topics that I really like to talk about because I like to implement it in as many places as I can in my business responsibly. So how do you use AI for investors? What are the main use cases that you see?
Yeah, we have a deep love affair with AI now. We've created 57 unique AI tools for our investor club, and some of the use cases, we call it investor superintelligence. One of my favorite of the top 5 most popular tools is we looked at 1,000 deal structures people use to put deals together. We then trained a tool to basically memorize all those structures. And then you say, this is the deal I'm negotiating. Here's the terms. Here's what I want to get done. Here's what the counterparty said. Design 10 deal structures that might work. It pops out 10 structures, and you can say, I like number 2 and 7. Pop out 10 more like that. And it'll do that over and over again until you say, okay, I like number 6, just tweak the seller carry or just tweak this, et cetera. And then it will refine it, and it will write the email to your attorney and the counterparty explaining why this deal structure is good for both parties. So you're more likely to close the deal. And having the right deal structure has won me many deals where people told me, go away, we're not going to do a deal with you, give up, you're wasting your time. And then we come back with another structure the same day and they say, we'll do that deal if you can close in 2 weeks. And so deal structures can change everything. And that's just one example of the 57 tools we have. And like, it literally could change your life if you sell an asset instead of missing the sale, if you buy an asset at a better price or with collateral or with seller carry. Like it's life-changing. You know, I'd pay for 20 years of membership in any investor club. So we get super excited about stuff like that.
Yeah, that is a great use case for AI and something that I actually didn't even think about during negotiations. Spitting the deal, the details about the deal, and then asking it to come up with a structure for sale. I've used it for underwriting, countless times, and I absolutely love it because it cuts down on your initial underwriting time like 100-fold. It's crazy. But using it to structure,
you can check it out, and if any of your listeners want access to that one tool for free, like it's one of my favorite. Like I'll shoot it over to you.
So you were kind of cutting out at the very beginning of that sentence. Can you repeat?
Oh, yeah. I'll send you over the link to that tool. It's called Deal Structure Ninja. And if you want to check it out for free, or any of your listeners would love to check it out, I'm happy just to provide that as a free bonus for anyone listening.
Nice. And yeah, I will put that link in the show notes for everybody listening as well. But yeah, it's a great use case. I think that is really smart because like you said, a lot of times it comes down to the terms, to the structure that you're putting together for the seller that will actually get a deal done. I've been in deals where the seller just gets stuck on their dang price and they can't get past that. But if you can get those terms in a way that makes it so it works for both parties, then you can get the deal done. And we have done that. And having an AI that's specifically tailored to get to those end results to where both parties accept it, I can definitely see the use there. So deal structure, give me like two more. Let's just talk about different ways. It doesn't have to be a specific app that you use, but just ways that you use AI in your investing.
Yeah. One way is that we took 1,500 investor transcripts from people that spoke on stage at the events, and then 1,000 public talks from billionaires, and put that into a tool. So we're able to have a conversation in talk mode or present a strategic plan. And if we want to get feedback only from real estate billionaires, we can do that. If we want to get feedback only from real estate family offices that have spoken on stage at our events, we can do that in real time. It allows you to evolve your thinking, almost like a dynamic advisory board. And you can change who's on the advisory board in real time, and it will reference where those quotes are coming from. So it's not kind of AI slop. And then the other one is related to what you mentioned earlier, having like a deal screener that not only scores a deal, identifies red flags on a PPM or top risks or missing items, but also writes the 7 first due diligence questions that you should be asking. And that way you use your AI brain. I kind of see it as having a second brain. You use your AI brain before you use your human brain and send over those 7 questions to save yourself time before you get on any phone call or look at it yourself. And some people are like, oh, well, don't you get dumber if you use AI? So that's like saying that you'll get fatter if you use a bike or drive your car. It's like, yeah, if you only use AI, you'll definitely get dumber. And if you only drive a car and you never walk anywhere, you'll definitely get fatter. But you probably want to go places faster sometimes. So maybe use AI when it makes sense and save yourself time. And then other times, it's good to go on a 10K run,
Yeah, I've comments to like some videos that I put out and stuff. There's so much pushback on AI, and I don't understand why, because it's not like you're completely just leaving your brain behind. You're using AI to augment to access things that you generally would not have access to. You can't hire a research team, 50-person research team to go out there and do this research. You could, but it would cost too much and it would crush the deal. But with AI, it's right there, and you're not abdicating decisions. You are just augmenting the knowledge that you have access to in order to get those decisions done. And another pushback that I've heard, I'm sorry, I'm getting on a soapbox here, but another pushback I've heard, people have said, like, do you feel like you're losing purpose? Like AI is just doing your job. And I don't see that at all. I see AI. I'm even more excited because it allows me to move quicker, to make better informed decisions. And I feel like there are only positives. So I do not see the negative side that people are afraid of, unless robots come and they take over the world and that kind of stuff. But until then, I'm a huge proponent of AI.
Same.
All right. Well, hey, Richard, we have run it down. The last question I always ask before we get into the quick question round is what you see on the horizon. So in the next 2 years, what are you guys trying to achieve, and what are your goals? Hey guys, quick break from the show. If you've listened to this podcast before, you know we are always talking about how important it is to have the right mentors and partners in real estate, which is exactly why I've opened up the Real Estate Investing Club online community. It's a place for active investors to learn, collaborate, and get real deals done together. And right now, it is 100% free to join. We host weekly calls where we review deals, talk strategy, and share tactics. Just click the link in the description below and come join us.
Yeah, I think with the family office space, I think people are really, there's a drive to quality, there's a flight to quality. So they're trusting people they've no longer met in person, seen the site, the industries where they've made money before, or for some reason they've gotten very high conviction. So you really need to be top of who they're considering in the niche and top relationship wise. For what we're looking to do, we've grown from 3 million to 18 million on social media the last 3-4 years, and we're looking to grow that to 100 million. We're also looking to take our billionaires.com site, and we've done 47 interviews with billionaires. We're trying to get that to 100 interviews with billionaires. And then the third thing is that we have this nationwide network of 30 events a year and these AI tools that would put up against anyone's AI tool set, but we don't have a publicly traded partner. So if you're listening and you work at Blackstone or head of AI at some publicly traded company, we would love to get a big brother partner at some point to put in the tens of thousands of investors they have to add to our 10,000 registered investors. And I think that would kind of flush out our investor club and make it the next level of world class if we could do that. So that's why we're trying to head.
Nice. I love it. You guys got billionaires.com. That's a snag of a domain right there.
Yeah, that took me 12 years to get. And they finally caved during COVID only because of the right deal structure. And then we moved very quickly. But I followed up every 3 to 4 months for 12 years because I knew I wanted to own that one day.
There you go. We talk about that all the time. It is all in the follow-up, and 12 years, that is a record that we've heard so far. So I love it. All right. With that, I'm going to push us into the quick question round. Are you ready?
Okay. Go.
Okay. It starts with education. It could be any form, book, movie, conference, mentorship program, you name it. But we need one recommendation for everybody listening to help them with their real estate career.
Am I Being Too Subtle by Sam Zell, a book.
That's a good one. I haven't finished that book. I do have it, but I haven't finished it, and I really do need to pick that back up because mobile home parks is actually what I buy, and that's and he's the master there. So good recommendation. Next question is for your younger self. Let's go back to the Richard who is just getting started. I think you said you were like 24 or something like that. Go back to him, look him in the eye, give him one piece of advice moving forward.
Put my vision into practice more confidently and more boldly, and don't go slow.
Nice. And when anybody says that, we put it in the same category as I wish I got started sooner. So if you guys are listening, anybody out there, you have not gotten your first deal done, this is your kick in the pants. Go get it done. Everybody wishes they were more bold, they took more risks, and that they got started sooner. And so just go out there, get it done. Could be land, could be single family, whatever, but you're going to be happy you did 10 years down the road. Next question is about the U.S. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
We're actually looking at the islands of Hawaii for land deals, but I'm just biased because I'm based out here, and I just think they're going to keep on growing in value as people in AI and robotics make a lot of money, and realizing that dying with a lot of money so their son-in-law can fly private everywhere and buy a condo in Miami Beach may not be as valuable as living in Hawaii during their life. So I think more people are going to be moving out here.
I was going to say land in Hawaii. That is that's a very small pool out there, but I love it. All right. Next question is about finding deals. It all starts with getting in contact with the seller and penning your purchase agreement. So what is your favorite way to generate leads and find new deals?
My favorite way is to put out notes online about exactly what types of deals we're looking for. We recently closed a pref equity deal into a distressed multifamily property. We got it at 37% occupied and doubled that occupancy the last 2 months. And so we're driving that towards a sale soon. And that came from, running our club and social network.
Yeah, and it's crazy. You mentioned this deal before we got on the show, and it had already been rehabbed. The work had been done, and they just weren't running the deal. And so it's crazy the kind of deals you find out there, where it's just people aren't doing the work, and it's all you got to do is just step in and do what's necessary.
We
It's
literally fired everybody at the asset except for the one who quit on the first day because they realized they were going to get fired. Nobody was doing any work. So it was like, okay, I see what's going on. Nothing.
that's a pretty easy fix.
Yeah.
All right. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something's going to go wrong, and that's when we get to learn a lesson. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
Yeah. One that went sideways is that I had a partner. We did 2 deals with them. Both deals struggled a little bit. And then the partner suggested we go a completely different direction. It'd be very high risk. And I was just glad I trusted my gut to say, no, I'm out. It's too high risk. And after we pulled out, we found even more trouble within the first 2 deals done. And it just made me realize that the lesson is just be super careful on who you partner with, because it's not just your reputation. You could be really in big trouble if they did something that made you both look bad, basically, right? Like there could be legal, there could be financial, there could be criminal consequences if you partner with the wrong person. It's like the biggest mistake. And the most important thing is decide who you're going to spend time with and who you're going to, who you choose to be around during your life, your spouse, your partners, etc.
Nice. I like that. Choose your partners wisely. Couldn't have said that better myself. And that leads us to the obverse of that. We just talked about lessons learned, but sometimes you get into a deal and everything seems to go right, and that kind of stands out as your favorite. So what was your highlight reel deal? What is the deal that you kind of stands out as one of your favorites?
Yeah, my favorite is I met a billionaire through our YouTube channel. I reached out cold. We kept in touch for 6 years, kind of talking every 6 to 9 months. And then we got our first transaction done, and he's got a publicly traded company behind him and that he owns. And we've done 19 transactions with him now. And our favorite one was a company we found. They had 30 million in assets, and we were able to scale them up to 140 million in just about 9 months' time through the publicly traded entity. So that was the most fun.
Nice. I love it. All right. And that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you? And then what can they expect when they reach out?
Great. Yeah. You could shoot me a text message at 305-333-1155. Our website is familyoffices.com. It's got our event schedule and membership options on there. My email is richard@familyoffices.com. If you want to reach out, we've got 3 of our artificial intelligence tools we can send you for free. We'll also send you the Deal Structure Ninja tool, which we don't normally give away for free. Just mention Gabe and we'll throw that in there. I also have a list of, there's 245 books authored by billionaires, not written on them, but actually written by them. And I have a list of the top 10 out of the 130 I've read so far that are my favorites. And so I'll send you the list of the top 10 billionaire books if you want to reach out and get that resource. Happy to provide that.
Perfect. I will put that link in the show notes. So if y'all want to reach out, all you got to do is click the little more in the description. It's going to pull down that full description, and in there you can find Richard's links.
Awesome.
All right, man. That wraps it up. Thank you very much for hopping on the show.
Appreciate it. Happy to have you at one of our events as a thank you for having me on here.
I love it. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review, a comment, anything like that. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.